Good morning, everybody. Welcome back to Morning Markets on the 30th of July. A couple of things that the team at True Potential have been discussing this morning, the first of which was just looking at how asset markets have performed in the past 24 hours. Interesting just to observe equity markets firstly. Looking there, what did we see? Relatively subdued performance in both the UK and Europe as investors waited, I suppose, sat on the sidelines to see if anything came from the Federal Reserve and their press release and subsequent press conference that they held post their decision yesterday. That happened after European markets had closed. So what did we hear from the Fed? Well, we heard that there was no change to interest rates as expected. They've extended the dollar swap program that they have available with other central banks. That ensures that there's sufficient supply of dollars in the global financial system. They also talked about the ongoing preparedness to do whatever it effectively takes to support the US economy. And in addition to that, they focused on the fact that there is some evidence that the resurgence and the pickup in COVID-19 cases in the US has had an impact on economic activity. And that's something that we've been discussing, something that we've been observing ourselves over the past number of weeks. That reassurance, if you will, from the Fed provided a bit of impetus to US equity markets. We saw both the S&P 500 up 1.2%, the Nasdaq up 1.4% on the day. The performance of the Nasdaq itself is interesting when we think about what some of the major components of that index, the major components of the S&P 500, the FANGs, have been doing, but also the fact that the leaders of four of those businesses, Facebook, Apple, Amazon, and Alphabet, parent company of Google, were testifying at Congress, as well as Congress is looking at some of potentially the antitrust issues that surround those businesses. I think that's an interesting angle to think about, and particularly in an election year and as we approach the presidential elections. We know the Democratic Party have in the past been keen to try and discuss some of the potential practices of these larger companies and how they may stifle competition. That's something to continue to observe and could be something that comes as more of an impetus as we approach the presidential election later in the year. In other things, in other asset markets, just looking at what happened in currency markets, we continue to see the US dollar weaken. It weakened another 0.5% yesterday relative to that basket of currencies. We know the basket is heavily weighted towards the euro, but it's also just interesting to note how sterling has performed over the course of July, where we've seen sterling strengthen from about 125, high 1.24 to 129, 130 yesterday. So quite a move for sterling. But in contrast to how the euro has strengthened for a number of positive reasons, one could argue, in terms of the actions that have been taken in the EU Recovery Fund, the recovery post-COVID-19 or the reopening of economies post-COVID-19. We still see the UK as being challenged in that regard, and I think the currency strength there is more a function of dollar weakness as opposed to a more positive view on the outlook for sterling assets at this point in time. Other points of interest, I think, from yesterday was looking in the US at pending home sales, an indication of future home sales, something that my colleague Chris Leyland touched on a couple of weeks ago in the chart of the week section, and that continued to build from May. It continued to build into June. And why could that be? Well, maybe there's some pent-up demand in the US housing market. It might be that there's a transition from city living to suburbs, or it might just be a function of where mortgage rates are and people taking advantage of record low rates in the US. But that indicates, and it's quite an interesting thing to observe, that consumers do have confidence to make that big ticket purchase at this point in time, despite everything that we know is happening in the background. That's it for today. Please join me again tomorrow. Thank you.